Welcome to another episode of the Morning Profit Podcast. This is your friend Taide Aburto, and today I have a very special guest. We're going to be talking about funding for small businesses, but particularly e-commerce brands. And as you guys know, this is something that we have been very passionate about over the years, not just through the associations that I run, but also through the consulting that I provide. So I'm honored to have today Kieran McWhite from Wayflyer, and we're going to learn about Wayflyer and the products that they have for e-commerce brands. And we're going to learn a little bit more about what's happening in the e-commerce industry right now because Kieran is or have access to a lot of valuable data that he's probably going to be sharing with us today. So welcome, Kieran. How you doing?
I'm good, Toto. Yes, absolute pleasure to be here. Really looking forward to getting into things.
Thank you so much for your time, and I'm so happy that you reached out to me a few months ago to introduce me to your company and the valuable services that you guys provide. Because I know that there are going to be dozens, and if not hundreds, of e-commerce brands that are going to fit from this conversation that we're going to have today. So, if you don't mind, please tell me who you are and tell us about Wayflyer.
Yeah, definitely. So my name's Kieran. I'm sure, as a lot of you can hear, I have a very strong Australian accent coming through. I'm living over in Dublin, Ireland, where our HQ is for Wayflyer. We've got offices all around the globe, New York, Sydney, London as well. And we're in a really, really exciting time for e-commerce brands. When we look at the US, we have over 13 million registered e-commerce sites. There's estimated revenue of $5 trillion, and there are over 50,000 brands making between 10 and 100 million at the moment. So
That's crazy.
America really is the land of opportunity. However, you have to spend money to make money, as
Correct.
everyone knows, and that is where Wayflyer comes in. So Wayflyer is a global funding company. We're here to provide non-equity and unsecured capital for growing brands. And through the success that we've created and the success we've had in the e-commerce world, we are now backed by JP Morgan. They're one of our many partners. We funded over $5 billion in debt funding, and we've got around 5,000, it's actually closer to 5,500 clients now at the moment. And we were just chatting before, it's a great time for us to be speaking because with Q4 approaching, on average, e-commerce brands do 30 to 45% of their revenue in Q4. So great time for us to be connecting on capital, as many brands listening are probably placing orders or have ads due to be uploaded. So yeah, a great time for us to chat.
No, definitely. Q4 has been historically great for e-commerce brands, but the numbers that you're sharing with us, it shows us that there are more small businesses that are getting into e-commerce. And we know, you and I know, and especially because of the direct communications that we have with business owners, that access to capital is one of those pains that small businesses face on a daily basis. But what other common pains do you see in e-commerce brands today?
Yeah, I would say, look, speaking with founders daily, there are a lot of headaches, I would say one of, if not the most common, is cash flow.
Mm-hmm.
The cover cash flow provides for upcoming bills, inventory ads, you've got expenses, waiting on revenue to land before you can make payments. You've got suppliers paying you late. You've got
Yep.
to pay your suppliers. And then you've got the growth of your business you're trying to do as well. So your R&D, your expansions, all of this requires capital in your bank account.
Mm-hmm.
And fast-growing brands experience such a struggle with cash flow and cash flow gaps. The common core we have is a brand that has a PO that's landing in the next month or in the next week. Their demand might have increased, which means that
Mm-hmm.
their stock is sold out quicker. They're looking to place a larger order. However, they don't have the capital on hand to place an order that will still meet their demand ceiling or their growing demand ceiling. So that's definitely one of the most common. The other is they're planning to expand the brand. They've
Hmm.
got a new product, a new market that they're looking to bring out, but they don't have the working capital on hand to do both, to fund inventory orders as well as grow the brand. So, as we were touching on, this is exactly where Wayflyer can step in. We can support the growth. We can fill the upcoming orders to either, allow the business to have access to that capital for their long-term growth goals, or as we said, Black Friday's coming. We want to
Yeah.
double down on orders. So I'd always think of it as, we're here to cover the short-term expenses, keeping a brand's existing capital for, longer-term growth goals.
And a lot of the business owners that are already in that mindset of scaling the business, they know how to add the cost of money into their operation, which I think it's very important because oftentimes they feel like, oh, if I get a loan, like I'm not gonna make as much profit as before. Where I
Mm,
think is the opposite. If you know how to strategically use these resources with the examples that you just provide us,
yeah,
uh, you're gonna be in a position where your profit margin is gonna be greater, and you are also
mm,
gonna have the opportunity to take market share away from your competitors, expand to new markets. So having this funding available, and we're gonna go into the details of what it takes to get funding from you guys. But what I
yeah,
love about your process is that it's very simple. There are very minimum requirements in terms of what they need to provide to get access to this funding. But that leads me into my next question. What would you think are the biggest misconceptions in your industry of financing brands?
Yeah, I would say oftentimes, especially when we pick up the phone to people and we're having conversations, or even when they first jump on, is secured financing.
Hmm.
We are not secured. We take no collateral. We take no assets of you. And obviously, in such an up and down economy, I think that's the way a lot of businesses and founders want to move to, is the unsecured side of things. So that's one, Wayfly being unsecured. The second would be equity. We don't
Hmm.
take any equity. There is uh, nothing taken from our side in that sense. You keep full ownership of your business. What we're here to do is the debt financing side. And I guess
Hmm.
the most common misconception with that is it's expensive. And of course, it's going to be expensive in comparison to a bank,
Yeah,
but they have the luxury of holding your collateral. You're
exactly.
paying for the unsecured side, you're paying for that
Hmm.
non-dilutive, and obviously the speed as well that we
Hmm.
covered. With our backing from JP Morgan, our rates and the way we structure our offers are more competitive than anyone else. And you were just touching on it before, but I can give you an example of a client that I underwrote, and we move forward with an offer today. So typically our fees are anywhere from 5 to 10%. That would be fixed on the cost of capital. We
Uh-huh.
typically provide around 2 to 3 times monthly revenue in terms of funding amount. So the brand I funded this morning, that was with 100K at 7%. So we're giving them 100 grand. The cost of borrowing that capital is 7K. This was an apparel brand. They estimate to turn that 100K for inventory into 300K top line revenue.
Jesus.
So let's take away cost of goods, marketing,
Yeah.
shipping, overheads, our fee, everything. That still leaves them with about 15 to 20% net profit.
Hmm.
So they've just made 40, 55K for that 7K investment.
That's great. I mean, you guys are helping business owners to have access to these opportunities that we know that the window for them are very small. I mean, you cannot wait for 3, 4 months to get the funding because that opportunity is gonna be gone. So you guys
Yeah,
are allowing business owners or giving business owners the opportunity to have access to these opportunities that can convert into bigger deals down the
yeah.
road because they're proving themselves into the marketplace, which is great. So who is the biggest player in the ecom funding game, Kieran?
I'd say the biggest players, specifically in the US, is probably Shopify Capital,
Okay.
followed up by traditional banks for larger brands.
And that makes sense because they have access to the back end, of all these e-commerce brands.
Mm,
I recently launched a e-commerce store on Shopify, and I'm already getting like invitations to get funding from them, even with the small amount of orders that we have. So I can see that
mm,
happening.
yeah.
So after them, it will be you guys, or where are you like ranking in the US in terms of funding for e-com brands?
Yeah, I'd say we're slotting in below that.
Okay.
It's really an education game. Shopify is so well known. As you said, you log in, the offers are there. Everyone has a bank they deal with. So for us, it's just an education game. We're growing and
So
growing every single year.
so what's good about them, and what do you think that it could be improved?
Yeah, I think with Shopify, as you said, I'd say in the US they have a stronghold. I'd say 70% of clients we deal with are on Shopify. So all these founders would have access. You log in, as you know, you have the three capital offers there. So it's very easy. It's really easy. And I would state Shopify as a platform is amazing, of course.
Yeah.
Shopify Capital is really for beginner brands
Okay.
who are starting their journey, and I wouldn't say should be used by anyone else.
Yeah.
And I'll tell you why. It's mostly built, their capital offers are mostly built on algorithms. So they're just looking at your revenue. They
Mm-hmm.
don't factor in anything else. A founder could be $10 million in debt, but they're doing
Yeah.
20K revenue a month, and
And they
Shopify would
still
still
offer
give
you
you
yeah.
an offer. So that to me is dangerous.
Mm-hmm.
I think the second reason is it's expensive. They're probably the most expensive capital
Mm.
provider because, as you said, everyone sees them. They have the visibility and the ownership of that market space. But I would say one of the biggest points is the way that they charge or remit their capital. So they remit based on a percentage of daily sales, which can sound really good, and they often
Yeah.
make it look like it'll take, a long time to pay back, but it's not the case. It's typically between 10 and 25% of your daily revenue. So if you're a brand that's doing, 100K and they're taking 25%, they'll take 25K back.
Yeah.
Coming into Q4, if you started scaling and the next month you did 150K, 200K, they're then taking 50 grand back. So
Mm-hmm.
you can pay off a 100K loan, in 2 or 3 months with them. And I had a client before who'd just taken 200K from them. The next day, he had a TikTok post that went viral. He sold out of some of their items, and he paid back the 200K in less than 2 days.
Wow.
So yeah, it's kind of they penalize you for growth. The faster you grow, the faster you're going to remit
Yeah.
to them. And I guess to give the listeners, some insights into the key differences here to Wayflyer is we have a team of underwriters. These guys are all trained accountants who
Mm-hmm.
assess every single business we work with. They look at your revenue, your debt, your marketing info for us to accurately assess holistically how much we can fund.
Mm-hmm.
In terms of our remittance and the way that works, we can look at either a fixed remittance, so you pay a set amount over a set period, or we can do what Shopify does and we can take a percentage of daily sales. However, we put a cap in place.
Mm.
So we could say, hey, we'll take, whatever it is, 25% of daily sales, but we'll never take more than 25K.
Okay.
So that means the better a brand does, it doesn't matter. They would still pay us a set amount, and you have more capital in your account to obviously reinvest in the business.
Do you know if Shopify takes credit score into consideration when they're offering you a loan, or it's just based on what the algorithm is collecting from your store?
I don't think that they do. I wouldn't be 100% sure, but
Yeah.
I don't think they do because it's still unsecured
And
financing
that's
from
why
their
the,
side. So
the
it's,
that's why the interest rate is so high.
yeah, so that's it. It's that buffer on that side. So I don't imagine they do.
They do. Yeah, no. And I want to share something with the audience here. Like, if you need, let's say, less than 100K loan for your ecom brand, there are going to be other options that are going to be more affordable than Shopify. So they need to know about Wayflyer, and probably even like a credit card with no interest rate for like 12 months, if you need like
Mm.
$10,000 or something. So take advantage of those
Yeah,
opportunities. And then that way you can keep building your profile. So by the time you get to Wayflyer, you will get access to the real money that is going to help you take your operation to the next level. So
yeah. And
what are some of the uh, most common mistakes that founders make in your experience, Kieran?
yeah, I guess, I'm in such a great position that we get to speak with founders every day.
Mm-hmm.
And oftentimes they're very open and honest and they tell us what they've done in the past and what's worked and what hasn't. So I'm in a very privileged position for, one day when I launch my own e-commerce business, at least I'll have some failings and winnings in front of me.
Oh, for
Um,
sure.
One that comes up, I can probably go through a couple. One that comes up a lot is the equity piece.
Okay.
Um, Specifically when a brand has a good idea and has a good product that they're selling through, giving away equity far too soon
Mm-hmm.
is a very common mistake by founders, especially giving away control of your business or equal control. Um, has been a big regret from a lot of people we've spoken with. And I'm not saying equity partners are a bad thing, of course.
Yeah.
If you bring in the right partner, they can open up a lot of doors for you. But I think equity shouldn't be taken um, too lightly for sure. And the second part of that, equity should never be used to buy short-term expenses, stock and marketing. Equity
That's a good
has to be used
advice.
for longer-term growth goals because you
Mm-hmm.
can't justify giving away a percent of your business every few months when you place an order.
Yeah.
You'll be you won't own a piece of it then in a few years' time. Um, so that's definitely one. I think something specifically with smaller brands when they're starting off, not negotiating terms with manufacturers.
Mm.
And this might be just moving from, net 30 to net 15,
Yeah.
um, whatever you can get to. And some manufacturers won't negotiate at all, but it's worth at least trying. I
Oh,
had a
for
customer
sure.
before that one day he just sent them an email and said, I want to move to net 7. And they came back and said, yeah, of course.
Mm-hmm.
So always try and push for that because again, it's just cash flow back in the business. You're
Mm-hmm.
able to do more. You're able to grow your brand. Um, I would also say taking Shopify Capital. We see it so many times where I speak with a brand and they'll say, "Wow, your terms are so much better. I'd love to take this offer, but I took Shopify Capital 2 weeks
Yeah.
ago and I can't take on more debt." And then we wouldn't, want to encourage taking on more. Um, I would also say trying to do too much themselves. We know how time poor founders can be. And I think sometimes, you know, depending on the person and their skill set, but it can be very important to look at bringing in fresh eyes, whether that be a bookkeeper, whether that be a fractional CFO, or
Yeah.
turning to an agency. These people are specialists, and you can find people with great incentives for great prices. I know an agency called Sagem out of Utah. There's a guy there, Keith. They will set goals for the business, and if they don't
Mm-hmm.
hit those goals, you don't have to pay them. So, obviously they're encouraged to work very hard.
Of course.
Um, but I think, sometimes founders are guilty of trying to do too much themselves and investing their time in the wrong place when they need to be focused on, growing the brand, scaling the brand, and they're not deep diving into accountant spreadsheets.
Mm-hmm. And when you are talking to business owners or conducting an assessment of a potential funding deal, what are some of the warning signs that a business might be headed for trouble in your area of expertise?
Yeah, so as I mentioned, so we'll underwrite every business that we work with, and we will have meetings with the founders before we start the underwriting process usually. And really, this is for us to assess firstly the founders' plans for the business, their goals, where they want to take it. Um, but we're a metrics-driven company.
Hmm.
What we're looking for is revenue trends, positive revenue trends. Sure, there's seasonality to businesses, but we want to see that positive revenue trend. Looking at marketing data as well, so your ROAS, your CAC, your LTV, when are your customers coming back, how much are they spending, as well as obviously the debt side. What debt has a brand taken on?
Mm-hmm.
Is it aligning with the revenue and the capital that they're bringing into the business? So they're all things that we would look at. Obviously, if a business has poor performing CAC, ARV is shrinking, ROAS is declining. These are all kind of warning signs for us.
Mm-hmm. So if I'm a ecom brand listening to this interview or watching this interview on one of our channels, what are some of the requirements that I need to have before I get a hold of you guys for a loan?
Yeah, so it's very easy. All it is, you sell products online. You are an e-commerce brand.
You're an
You
e-commerce
need to be
brand? Mm-hmm.
operating. You need to be operating for at least 6 months, and you
Okay.
need to be doing a minimum of 10K,
Okay.
$10,000 revenue per month.
So ecom brand and 10,000 average revenue for 6 straight months.
Yeah, and
Okay.
then obviously the company needs to be registered in the US, in
Mm-hmm.
Canada, Australia, UK, and Ireland, any of those.
Okay.
If that's the case, then yes, we can underwrite the business. Takes us 24 hours. Your application takes about 5 minutes, and we can come back to you with a funding offer.
Man, that's fast. Now, I know that you have multiple case studies that you could share with us, but if you don't mind sharing like one that will get our audience like excited about it.
I'll give you two,
Okay, two.
because
Perfect.
there's
Perfect.
two fresh in my mind. Everybody knows the big apparel brand True Classics,
Yes.
and I think it's good to share these guys because the reason that they came to Wayflyer was that banks were moving too slow. They
Yeah.
couldn't keep up with their growth, which is so common with e-commerce brands that we
Yeah.
work with that are scaling and taking off on a trend. You know, these guys got to a point they're doing now $100 million a month. The company was valued earlier this year at 850 million,
That's
without giving
crazy.
away equity. So that's
That's
obviously the goal
insane.
is, any brand
So
listening
when
is
they
to
when
get to
they
that
come to
point.
you, how small were they? When they come to you, like how much revenue were they generating?
Nowhere near what they were now. I can't
I
give you
bet.
an accurate.
I
I can't
bet.
say the accurate figure, but they got to a point where they moved to a very large line of credit,
Okay.
because we could adjust it on a monthly basis. So if
Mm,
they end up doing 100 million in revenue, their line of credit with us would adjust that very day. So
wow.
that's how we can continue to scale with these huge brands as well as these very small brands.
I love that
Um,
flexibility for what you mentioned earlier because it literally can take a live stream on TikTok to change your sales trends in your business. And
yeah,
and we're talking about hours. So if a brand like True Classics go through a situation like this where, let's say they were selling 100,000 products a month, live stream happens, they sell 200,000, so they need to have that flexibility to get the access to funding so they can order more inventory, invest more in marketing, etc.
definitely. I'll actually give you two more because there's another guy. He's
Okay.
a really good founder I've worked with, called Billy. He owns a company called Carver Haven. So they do a non-alcohol based Carver drink.
Oh,
Gives you a little buzz as more and more people are obviously turning away from alcohol
yes.
nowadays, especially the younger generations.
Yep.
They came to us. It was back in March, for capital, to help boost their stock and inventory. So we gave them their capital, filled them off, and within 4 weeks they were completely sold out off their website. So they
Wow.
came back to us, and we gave them more capital because we could see the growth that they had, and they weren't getting that flexibility or those options from anyone else out there. The last one I want to mention is
Uh-huh.
Breeze. Um, these guys are a THC based drink.
Okay.
You've probably seen them over LinkedIn. Their founder's name is Aaron. He is a super inspiring guy, but he also shares the full journey and he shares openly his numbers, the revenue, the profit he's bringing into the
Uh-huh.
business, which I think for any e-commerce founder out there, go and give him a follow because it's so worth seeing his journey.
His journey, yeah.
Um, They came to us recently. We've actually got a YouTube video with the founder up on Wayflyer's page, and he talks openly about it. We gave him $10 million. That's been a game changer for him. It's given him the cash buffer to run the extra ads, to place larger orders, just to take advantage of every opportunity that comes his way. And if you follow his journey, there's just non-stop things that land in his place. And to be honest, without that cash buffer, you can't take advantage of the opportunities that present themselves.
Wow. No, great stories, and I'm pretty sure that you have dozens more that you could share with us. And I'm very excited for this partnership that we have and this conversation that we're having, because there are a lot of business owners out there that need the funding, but they don't know where to go. So
Mm,
now, if they're an ecom brand, they know that they have other options outside Shopify. They have
yeah.
Wayflyer, which is gonna be a more friendly funding option for the business owner. And I know for a fact that after some of the folks that watch this interview or listen to this in our podcast, they're going to be interested in reaching out to you, Karen.
Mm.
So, what are some of the ways that they can, or how can brands listening get in touch with you? Of course, that they can go through us, but also they can contact you directly.
Definitely, yeah. So I'll share a link that I'm sure you'll upload with this video, with this podcast, as
Mhm.
well as I would encourage anyone to connect with me on LinkedIn. You know,
Okay.
not only are we here to have conversations about financing and funding your business, but I'm lucky enough to be in a position where we're meeting hundreds of CFOs, of CMOs, of bookkeepers, fractional services,
Yeah.
manufacturer advisors. So even if founders just want to connect with me to learn about that side of my network and meet some
Hmm.
people that's going to benefit their business, please just connect, send me a message. More than happy to get in touch.
That's perfect.
And then from the Wayflyer side, brands that are looking to find out more, you can go on the website, click the application. It's quick and easy. It takes about 5 minutes to submit, and then it's 24 to 48 hours to review on our end. So yeah, I'll send through a link, so it's linked to this podcast,
Yes.
and yeah, nice and easy. Then just click of a button.
No, please do. And I hope that a lot of business owners that follow us reach out to you, because I would love to hear some of their success stories as soon as they start working with you. One of the main motivators that we have right now and moving forward is that we want more American businesses to compete in the digital economy, and that we know for a fact that they're going to need funding, because that's one of the main resources that will allow them to become more competitive in the marketplace. And it's so great to have companies like yours that are going to facilitate that access to funding that they need. So I want to thank you, Karen, for your time and for sharing all this information with us. I'm pretty confident that this won't be the last time that we will have you on our show, or reaching out to our audience, because I know that there is going to be a lot of interest in what you have to offer.
Yeah, no, really keen to meet everyone and hear about your brands. Honestly, as I said, I'm in such a great position. My day is meeting founders, them telling me their beautiful success stories of why they started the brand that they did. It's always inspiring. So yeah, whatever we can do to lift our brands up, get them to the next level, we want to be there to start that partnership.
Perfect. Anything else that you would like to add before we go, Karen?
No, just always a pleasure to speak with you, Tade.
Awesome. So remember, reach out to Karen via LinkedIn. We're also gonna add the application link under this video and podcast wherever you find it, so you can have access to the application form. Karen's team will receive it, process it, and as you heard earlier, access to funding through Wayflyer is very simple. As long as you have your 6 months of recurring revenue above 10,000, you are pretty much in for something. So hopefully we'll be getting some feedback from Kieran over the next few weeks and months of how many deals have been able to fund through our network. So thank you again, Kieran, for your time. I appreciate it. And I look forward to working with you, my friend.
Thanks very much, Tide.
Take care. Bye.